We're here at Le Bourget outside Paris at COP21, and we're here with Assaad Razzouk, who is, all of our reporting has really been inside of the gap between where we're predictably headed and what it's going to take to actually end the crisis in time. And I'm especially pleased to have you with us to bring the business, the financial, the hard facts, hard reality, hard actions, and hard results that it's going to take to end this crisis, to bring that perspective to this conversation. And so I, first of all, welcome you and would really like to get your take on what's happening here and what you see as far as the gap that needs to be bridged and who's going to bridge it and how it will get bridged.
Thank you, Lachlan. Very nice to be here. I run a renewable energy business headquartered in Singapore, which is building solar power plants, waste-to-energy power plants, and other clean energy power plants in countries with huge population, so India, Indonesia, Thailand, the Philippines, which are very much at the, and China, which are very much at the frontier of the suffering from climate change. I also chair the Association for Social and Responsible Investing in Asia, and I sit on the board of the London-based Climate Markets Investment Association. So I've been, looking at that space from wearing all these hats, so to speak. And look, the gap is very clear. We are trying to build a clean energy or green, low carbon infrastructure, which is going to last decades. Now, that's an infrastructure, effectively, if infrastructure rebooting, okay? Infrastructure requires long-term money and does not produce 5 times your investment in 3 years, which is what, say, private equity investors may be after, right? The key problem that we have is we need $10 trillion to shift, according to McKinsey, the EIA and others, to shift into the renewable energy space to effectively decarbonize not only energy, but building, infrastructure, cars, cement, steel, and what have you. $10 trillion sounds like a lot, but in fact, it's only 25% of what we're going to shift anyway into infrastructure. That $10 trillion, the mobilization of that kind of money, unfortunately, is not affected in any way by the climate talks. You have capital markets that have $150 trillion who are ultimately going to finance this transition. The capital markets aren't here. The capital markets don't price climate risks. They don't price natural capital risks. So if you look at, I'll give you an example. If you look at a real estate investment trust that's holding real estate in Montana, and you look at another real estate investment trust holding real estate in Miami, the financial markets discount the leases from those holdings in the same way. There is no risk premium attached to the fact that Miami may not be with us in a few decades. And until that changes, the money is going to think about everything as being equal because we're basically not doing the math correctly. And so you've got a systemic problem of not doing the math correctly in the capital markets, which if it was resolved, would actually send the 10 trillion to the right place. But at the moment, they're basically going to the wrong place. And I haven't really seen anything that would affect that. Final point on that issue, remember that governments cannot afford, well, they don't really have that money. That money is in the markets. So here you have governments that are talking. Of course, they are highly encouraged to implement long-term, stable investment climates that are conducive to a green economy. And that's very welcome. But at this rhythm, it's going to take them another 20 years. And by then, effectively, the damage would have been not only done, but irreversible. It may already be irreversible. So we're fighting an uphill battle.
So we, even though we are a news organization, we're kind of consider us an activist news organization because we're not just out to inform people, but also
Activist is good in this space.
yeah, and a little bit alien, right?
Yeah, absolutely. Yeah.
So not only to inform people, but to wake them up and also get them mobilized. So our kind of what we're leaving this conference with is the critical window that we've got in front of us between now and 2020, which is when this agreement will even go into effect. And looking at it in terms of the emissions decline that has to be impacted, all of that. So would you see anything with regard to the financial sector, the $10 trillion, something that you could see that needs to happen over like the next 5-year period to be able to have us get more on track to something sustainable where we won't blast past the 2-degree window?
There's a nice short answer for that. No, but let me maybe elaborate.
Okay.
So let's say that you are a pension fund from Wisconsin, say, and today you're investing in different asset classes via different asset managers. So you're giving them money; they are in turn investing it in various strategies. You're not giving them a mandate that is forcing them to take into account climate risks, to price things properly. I mean, I'm sorry to granulate to that level, but we need that to change
Yes.
to basically unlock 10 trillion.
Yes.
And if that doesn't change, it's not going to unlock 10 trillion.
Okay.
Now, that can change in two principal ways. Either government comes in and says, right, here's a carbon price that you all have to adopt, it's the law. And then they would be forced to basically put it into their cash flows. Or there needs to be effectively recourse to the courts to basically argue that they are not currently discharging their fiduciary duty if they aren't taking climate risks into account themselves. Meaning, why are they waiting for government to tell them something that is patently obvious to you and me,
Yes.
and therefore to them as well?
Yes.
Unless one of these two things happen, it's very difficult to see any connection between the text of the agreement and the reality of the financial markets.
Yes. Well, and again, I'm not a financial guy by any stretch of the imagination, but we are assembling key players in different arenas, the oceans, financial, that to get the word out that these are the critical elements that have got to be moved, have got to be shifted. Something has got to alter here way beyond business as usual in what we're calling a relatively short amount of time, which we're saying 5 years because I think one thing I think it's accurate. The other is that it's kind of a number people can grab onto in a way that it isn't 2050. It's, doable. And any participation that you would want to have or anything that we could do to illuminate, to get the word out as far as this $10 trillion of financials, something that I had no awareness of until I was introduced to you. We would love to be a part of that, support that, have that be one of the things that people start to get their eye on that is not going to come from here or this agreement. That's what we would be up for.
Okay, well then here is the formula. So think of the capital markets as a triangle. It's $150 trillion or more. At the top of the triangle, representing 25%, are the pension funds worldwide, of which the bulk are actually in the United States. If these move, everybody's going to move. But they can't move just by adopting disclosure standards on carbon footprint and things like that, and asking their portfolio companies how much they're emitting, because that's not movement. That's kind of running in one,
Yes.
while standing. So the way they have to move is they have to actually build the risk of climate change into effectively all their investment decisions. That's the move that's required.
Okay.
If you step back to the text, there are good things about the text. I think the principal good thing is the fact that 180 economies adopted effectively low carbon business plans. But these are woolly and unenforceable, and it's unclear if also their monitoring is going to be good enough, and if they're going to tighten over time. If all that happens, then great. But we need to move effectively from concept to reality. So there's a huge implementation gap, even in the best feature of the agreement, which is those low carbon business plans, which the UN in its jargon refers to as INDCs.
Yes.
Right?
Yes.
That's the principal good thing in the agreement. Everything else is really not connected. As I said, there's a gap, there's an implementation gap.
Yes.
It's not connected to what's required on the ground.
Okay.
Because we're going to need to decarbonize our infrastructure, and the text isn't doing that.
Okay. All right. Well, we would like to be part of whatever we can provide in supporting to produce what I hear as a gap in implementation.
Correct.
Okay?
That's exactly what it is. There's a huge implementation gap, and at the moment that gap is leading us straight into a big white wall.
And then would you be willing to just kind of be an advisor in the matter of the project in terms of that implementation, in terms of the $10 trillion, in terms of the pension funds, all that you're speaking, such that what we are going to be doing in our project is accurate, has the right kind of teeth to it, has the right kind. Would you be willing to work with us in that?
Look, I'm very happy to talk. Yes, so I'm around, but also, I'm not the only one.
Yes.
I mean, you have an entire financial infrastructure
Yes.
that understands exactly what I'm talking about, and we need all of them or some of them involved.
Yes.
It's very interesting to note that by and large, they are completely absent from both the negotiating area and this area
Yes.
of COP21.
Yes.
There's nobody here representing the 150 trillion really in any scale.
Yes, yes. And you are here. So I would say that there is someone, and
There's a few.
exactly, and that. Okay. Well, I thank you very much.
I'll let you think about that. Thanks so much.